Hey everyone, in honor of July 4, Independence Day here in the US, what I wanted to do here is highlight my top 4 dividend stocks to buy in July. That's right, 4 stocks to buy for July. Let's get started with the first one here, Caterpillar. Caterpillar boasts a dividend yield of 1.97% and is trading at a forward price to earnings of 13.37. The stock is not expensive when you compare to the S&P 500. The average value forward PE in that is between 18 and 20. Here you get Caterpillar at a price lower than that, and the company's got excellent prospects. Its revenue is growing, its profit margin is expanding, and given all the fiscal stimulus that was passed in the US that calls for more construction spending, these prospects are good for Caterpillar over the next several quarters, perhaps several years even. So even though the dividend yield is just 1.97%, that has a good chance of increasing over time. The next stock on my list of top 4 dividend stocks to buy in July is Deere. Similar to Caterpillar, Deere has excellent prospects in the near term as its equipment is highly in demand. Rising commodity prices has increased purchases from farmers looking to harvest their yields more effectively, and it's got innovative technology with autonomous equipment now. So it's got really good prospects, also trading at just a forward price to earnings of 12.48, offering a dividend yield of 0.89%. Again, I will remind investors that even though the dividend yield is not so great right now, it has excellent chances for increasing the dividend payment over time. Deere, like Caterpillar, has excellent demand for its products right now. The company has instituted double-digit price increases, allowing its margins to expand, and it's got really good outlook for the next 2 to 3 years, I would say right now. The third stock I will highlight as my third favorite dividend stock to buy in July. Well, I shouldn't say it like that because these 4 are not ranked in any particular order. They're just my top 4 dividend stocks to buy right now. Visa boasts a dividend yield of 0.74% and trades at a forward price to earnings of 24. Now, Visa is more expensive than the first 2 stocks mentioned, but I'm willing to pay a premium price for Visa stock. This company has one of the best operating profit margins of any of the companies I follow, period. Over 100 companies I've followed and covered over the last several years, and Visa's got one of the best operating profit margins. Plus, given the investments and relationship building it has done over the past several decades, it's going to be difficult for anyone to encroach on its business. Think of how many merchants it has worked with to get them to accept its card, its payment service, and think of how many people have Visa cards. Total, there's over 4 billion Visa cards in people's wallets today. Now, I know some people have more than one Visa card in their wallet, but total, there's over 4 billion Visa cards in the world. And that's what makes merchants want to accept Visa as a payment method, and that's going to be difficult for anyone to encroach upon. It's one of its main rivals, MasterCard. They're not competing fiercely against each other on price, right? They've said, you know what, we've spent all this time building out this network and investing in this network. I'm not going to compete with you and lower prices to eat at my profit margins and your profit margins. Let's keep things the same, relatively speaking, right? We can't openly collude against each other, but let's relatively be okay with each other, and let's both reap these excellent benefits, which is great news for investors when competition is limited. Finally, the last of my top 4 dividend stocks to buy in July is Home Depot. The company boasts a dividend yield of 2.6% and trading at a forward price to earnings of 19.35. Home Depot had a difficult quarter in its most recent one. Notably, in its biggest market, California, there was bad weather throughout the first quarter. And so that crimped demand for home improvement. I suspect that its second quarter will be significantly better. I wouldn't be surprised if Home Depot, after its second quarter results, raises its yearly target after lowering it in the first quarter. Another reason why is because management often says home prices are one of the strongest indicators for demand for home improvement, and home prices, after flattening out a little bit in the first quarter, have continued to rebound and rise again across the US, which is good news for home improvement spending and Home Depot. All right, so there you have it, my top 4 dividend stocks to buy in July. All right, but that's all I've got for this video. Thank you for watching. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.